So, Mike, I'm pretty sure from our conversations, your favorite loan, maybe you don't have a favorite, but one of your favorite loans is the DSCR loan.
I think it is. I think for investors, real estate investors, it's one of the easiest tools they could use to accumulate the properties, the wealth, the cash flow. If you're looking at a great loan, if you call a loan a tool, the DSCR loan is something that everyone should know about.
So let's run through the basics from what does it stand for to like what is it, how does it work?
So DSCR stands for debt service coverage ratio. Easiest thing to remember, it's the no personal or business income documentation or income loan. So it doesn't matter if you're just started your business, if you're unemployed, any of those things, because they do not look at your tax returns. They don't look at you personally. They don't care if you started yesterday or, like I said before, even if you have a job.
Yeah, you've called it the no income loan before.
Yeah.
It's like you don't need to worry about personal income. Yeah, the property has to cash flow, but like that's still mind-boggling that like you don't have like for almost any loan I've ever heard of, and I think that's why people coming into it are like, wait, really? Is this what's the catch here?
It's a perfect thing for investors or people coming into investing, or even the investors who write everything off, because there's so many people who are in that category. That's why it's a great loan for investors.
Okay.
Is there's people just starting out, so it works for them. There's people who have been in this for a while, but they write everything off, so they don't have the income. It's perfect for them too.
Awesome. Okay. So it's debt service coverage ratio. You don't need personal income, and you could even have written everything off so you don't have the income, and you could still qualify. So how does that work? How can you still qualify?
Well, it's based on three main factors. Number one is, like I said, the income from the property. So they're looking at, does the property cash flow, which means does it at least pay all its bills? Does it pay the mortgage, the taxes, insurance, your HOA and flood? That's the only bills that this particular loan care about. We're not going to bring up all this other stuff like property management. We're just looking at those 5 things. So it makes it easier there too, because we are identifying properties that make money based on these 5 expenses.
Gotcha. And they make money from the rents. That's what you're saying.
Yeah. So monthly, the rental income comes in and they have to pay these bills. As long as the property is making that kind of money, at least breaking even, made that first hurdle, which is no income docs, no tax returns, no verification of employment, all the things that make loans slow down.
Yeah. So it's a quick one because of that, if you qualify. And so is DSCR exclusively for rentals then?
It is exclusively for rental properties, not for fix and flips, not for properties that need a bunch of work. These are properties that we call rental ready, meaning people could move in right now. You could rent them. So it all depends on what you're doing. So DSCR is great for people buying and accumulating properties. Those people are trying to fix and flip. This is not the loan for you.
Gotcha. Fix and flip, or even like a rental down the road, because they're not going to be able to know if like, can this be rented for this amount right now?
Yep.
So they can't really determine. Is that the reason that you can't do like a longer term? It needs some love.
Well, if it needs love, that means there needs to be money put in it to make it rental ready. If a DSCR loan, they want it to be making money or can make money now. If it's going to take you a month, 3 months to fix it up, that's not what they play in. That's not their game.
Okay.
Because now that property as it sits, if something happened to it, can't make money. We're thinking about this little property here who could make some money. If it doesn't have a kitchen, doesn't have a bathroom, doesn't have a roof,
right,
it's not going to be making money.
Hey, you're talking about my house now. Jeez.
So DSCR is for those properties where people are either living in it now or is rent ready. Nothing that needs major repairs. A few repairs here or there could get away with, but it's not a value add. Saying that, DSCR is great for the BRRRR strategy, which is you use another loan to buy a property, fix it up, and then refinance it once it's rent ready into a DSCR.
Gotcha. So that's one of the things if someone was to be like, what's the catch? It's not really a catch, but it's like, well, this is a very specific loan. It's for those who are real estate investors that have properties that are rental ready. Right. They're not looking at fix and flips. They're looking at rentals, and they're ready to do that right now.
And another thing, they're rental properties that you rent to someone else, because there are rental properties like someone will buy a duplex, live in half, rent out the other half.
Oh, okay.
These are not for anything like that. This is just for properties you are going to buy and you're going to rent to someone else.
So it's a business loan.
It's a business loan. That's another thing we were going to go through is it's a business loan, which typically means it has to be in an LLC, corporation, something like that. The loans are made to the business. We're talking about 3 things here. You have to have the income. It's a loan to value. It's also based on your personal credit score. but it's not going to show up in your credit report because it's made to a business. It functions as a business loan, and that's how they're allowed through the government has all these laws and regulations. They call it TRID. A lender on the other side, the non-investment side, can't prove that you personally can afford the loan. They can't give it to you.
Okay.
These are business loans. So that's why we don't care about your income or your business's income. We just care about that property's income, the loan to value, but your credit score too comes into play here because everything is underwritten by a computer. Credit scores matter in this world.
Okay. To reiterate here, debt service coverage ratio, no personal income required loan, but your credit score does matter. And what was the last thing we were talking about before that?
Well, there's loan to value. So
Oh, yeah.
how much leverage you have on
That's
the property.
right, yeah. Has to cash flow, and then credit score is also important.
Yep. So you don't have all these income docs. Right now, at this point in time, the DSCR loans, which are typically 30-year fixed loans, so it's just like a traditional loan, but they do come in interest only. This is investing, so they have some flexibility where for 5, 7, or 10 years, they'll allow you just to pay the interest on the payment so you could increase your cash flow. These loans at this particular time for the 30-year fix, we find that over half, probably even 70%, DSCR loans are cheaper than your conventional loans. So your conventional loans were always like, hey, it's the cheapest, it's the easiest, I can keep it in my name, which wasn't that great of an advantage because now you have all these rental properties in your personal name that show up in your credit report that affect your credit score. DSCR is the opposite. It doesn't show up in your credit score, but typically it was always a half a point or a point higher for DSCR loans on a 30-year fixed. Now it's kind of the opposite. We're seeing DSCR loans on a lot of things with people who have good credit, same LTVs. We're seeing that the rates are actually better on the DSCR than the conventional at this point in time.
Interesting. Huh.
Yeah.
And why do you think that is?
Just because the conventional and the DSCR are based on two different indexes. One's a 10-year, one's more like a 5-year bond, right? So they're just based on different things. So right now where inflation and everything is and what the Fed's doing, they're really impacting the traditional conventional loans. These are not government-backed or government-sponsored or anything like that, like Fannie, Freddie, FHA. There's some government involvement over here, and they're based on something different than the investors who look at these kind of properties.
And are there any DSCR tools on the cashflowcompany.com?
Yeah, we have a couple, but the first one is the DSCR Calculator because it's all based, again, on the income of that property. So you have to figure out, does this property cash flow? So we have the DSCR Calculator there. Go to the cashflowcompany.com, look under tools. There's a calculator right there. It's downloaded. It's free. And you could use that to make sure the property's cash flow because that's what it looks at. The DSCR ratio is basically where they break even, where your rental income, your monthly income, compared to your mortgage payment, your taxes, your insurance, your flood, and HOA if you have those two. So we compare. This calculator will run through and do that math for you.
Oh, very nice.
But don't even worry if your property doesn't cash flow. There's options out there for you with DSCR too.
So there are even options in DSCR if the property doesn't cash flow.
It does, yep.
Wow, okay.
Yeah. You might be 5 or 10% lower in your LTV, but there are options, especially if you're in a hard money loan or you think that the property valuation is going to go up and it's worth taking a little bit of a negative hit during this time. DSCR has a lot of great options for you. And in the investors who want to keep adding single families all the way up to multi-units can be refinanced or purchased with a DSCR.
Excellent. Is there anything else to talk about with DSCR?
I think we've gone over the main points that it's based on the income of the property. You need a good credit score, LTVs, and the flexibility and the rates out there right now are just outstanding.
Fantastic. All right. Well, I hope people take advantage of the DSCRs. Yeah, thanks.